I think the one thing we also have to think about is why rates might not be coming down, right? Because I think it's interesting you're seeing this, Michael, you brought up a good point, a knee-jerk reaction. I think that's exactly what you're seeing today because the bond markets have been pricing this in. I think we all knew that the Fed was going to have to either start pausing here or cutting less than they were expected to. But if they're not cutting because the economy is strong and prices are still stable, that's very different than them having to cut one or two more times next year because they need to save the economy. And if you're in that position where the economy can continue to grow, unemployment stays low at these higher rates, I don't think that's a problem for a lot of the equity markets in general. You're seeing this knee-jerk reaction specifically on some of your rate-sensitive sectors, so things like real estate, things like small cap are clearly playing off today. But inflation is going to be a concern next year, so you want to have those inflation hedges in there because that could be a problem, but you want to make sure you balance that out.
So in that scenario that you laid out, Courtney, does that mean that these dips in some of these high-flying names, I mean, do you go in and buy big-cap technology? I mean, I think that's what I don't want to boil it down so simply, but I'm sure a lot of people at home are thinking, you know what, NASDAQ down 3%, 3.5%. Is this my chance to get into an NVIDIA? Is this my chance to get into Bitcoin?
I think what you have to look at, too, is even though this has had a dip, these are still doing so well since the beginning of the year. So when we look at our clients, most people are still way overexposed to these. We've been trying to get people to take some profits off the table. Even with this dip, that's still the case. So is it buying opportunity? Probably. But most people, I would say, are still overexposed to it. So I think that's something you need to balance out.